Bitcoin took a bit of an unexpected surge to the upside, and we have seen Bitcoin's price rallying up quite nicely. Is this rally, though, over, or are we to expect even more to the upside? In today's video, I'm going to be breaking down the technical analysis on BTC, sharing my thoughts and opinions as to where I think the price action is heading. So, as I get into today's video, smash that like button if you're new, subscribe, and let's jump right down into the charts. So here we have Bitcoin paired up with USDT. We're on the 1 hour Binance chart here. Now, our original expectations yesterday were to come down to this range of 57,688 to 58,224. Okay, this was going to be our fifth wave movement. And of course, we were going to be looking for this move to the upside between 61,615 and 62,143 after we had completed these moves to the downside. However, Bitcoin decided to do something totally different, breaking out of our structure here. And anyone who watched yesterday's video would know that we were looking at ideally a short position in here, which actually would have seen a fair amount of volatility yesterday. We would have actually hit this area right here, stop loss above that previous high, and targeted out a 1.5 risk reward ratio. We could have potentially traded this quite beautifully and actually got some decent profit. However, our take profit was going to be all the way down here, and obviously we would have been stopped out. So hopefully, people were trading that one a little bit better, finding support on that 200-day EMA, and ultimately seeing this run to the upside with a good breakout. Okay, so obviously our 5-wave structure was broken. That was not what was going on. Our 3-wave structure is also something that we're going to look at in just a moment. So I'm going to go ahead and just tidy out the chart here just so that we can see, what's been going on. Okay, so this particular surge to the upside is interesting. We have a couple of institutional candles and fair value gaps that were completely filled out on this move to the downside, because we did, of course, see more liquidity getting extracted out of the market. I've been talking about this for a while. 5% move to the upside, 5% up, and of course we come down here by 3.39. Okay, finding support at the moment on the 50 SMA, the yellow line, and the 50 EMA, the blue line, coinciding at $60,000. Okay, so that is the support levels. We actually had seen a wick move down at 2 a.m. UTC today. That wick low was 59,724. Okay, so lots of liquidity being extracted. But let's talk about the structures that we can see in here in the charts. So as we can kind of see, we have this very interesting kind of structure coming in. We have hit 1.618. So what we're looking at here is an impulsive break to the upside, but we have, of course, broken back down and actually created these overlaps. These overlaps prevent it from being an impulsive 5-wave pattern. Okay, now it can be a diagonal because we can see 3-wave patterns, and it's really important because here we can see that we were tracking that 3-wave pattern which completed. Okay, very important that we understand that. And then, of course, we have this big run to the upside, which also has to be a 3-wave pattern. Okay, so internally here, it's going to be quite interesting. If I take a look at it on the 15-minute time frame, you see big push up, bound, and then bam to the upside. Okay, and it has to be considered a 3-wave pattern for a diagonal. And here you don't really see a clean structure. Instead, you see a 5-wave pattern. You have the wave 1, the wave 2, the wave 3, the wave 4, and then the wave 5. Okay, so it's a 5-wave pattern. That makes it a 3-3-5 and not a diagonal based pattern, because you can't have a 5-wave pattern in a wave 3. The only way to change this is that you actually rally up and you go even bigger, and you have a bigger kind of structural point to the upside where you actually start seeing these larger structures appearing. It's like a zigzag pattern, but I don't think that's going to be the case, because we can also see a very impulsive move to the downside here, with resistance currently finding on the 50 simple moving average, the yellow line just coming through the chart. So lots of interesting kind of structures going on the smaller time frame. So let's bring this back up to the 1 hour. So we know that this is looking very impulsive, 5-wave move to the upside, and then we broke on down also in a 5-wave move. So this to me now looks like we have to kind of consider it a 3-wave pattern, even though it hit the 1.618. Means it's corrective, not impulsive, not trend, not likely to continue the surge to the upside. The current structures also mirroring a 5-wave move to the downside, but that wave 4 is already piercing up quite high and is likely to break. So essentially here, what I'm trying to say, I don't know if I'm articulating it well enough for you guys or not, but what I'm saying is that we are seeing a market that doesn't really have any clear kind of trends. All you're really seeing is liquidity being extracted from the market. This is something I've been talking about for, well, very long time. Essentially what we're seeing here is the market makers, the whales, the liquidity hunters are just pushing the prices to where pockets of liquidity are. There is a very illiquid market at the moment, which is why you're seeing these kind of swings in the markets, make it easier for liquidity hunters to take advantage of. Because there isn't a lot of buying and selling going on, there's actually really quite easy moves to be made within BTC's price action where you can swing the prices to the pockets of liquidity. And if there's a huge pocket of liquidity, that can cause cascading liquidations and all that kind of stuff. So it's important that we understand that when it comes to the price action of Bitcoin, although, you know, we want to kind of see great runs to the upside, we want to be big bullish trends, ultimately all we're really seeing here as I zoom out is just liquidity being extracted from the market every single time. But you know, for the most part, very, very interesting stuff nonetheless. Where we sit right now is the potential for this to see some interesting volatility once again. Okay, if we take a look at the stochastic RSIs, we are more than likely going to be looking for a push to the upside, which again doesn't rule out the idea that we are in that kind of, you know, zigzag pattern that I was talking about, like that bigger runs to the upside. It's definitely possible to do that, but I do think we have to kind of see more volatility in and around here. On the smaller time frames, just expect more of this. I don't think we're going to change anything right away, and we do have the potential actually right here to think about a long position because it does look like a pretty sweet spot here in my opinion. So we want to be kind of thinking about that, but it's hard to kind of say that you're going to get into those higher highs just yet. So I probably wouldn't be looking to go long on Bitcoin until we have those confirmations and all that kind of stuff. So interestingly, if we roll this up into a daily time frame, what do we see? Well, things get a little bit more interesting here on the daily time frame because as you can see, we got a new higher high here on the daily time frame, higher than what we were on the 14th of August. Okay, but it did come up into this range that we've been talking about for quite some time on the daily time frame. Okay, this was our range where we're looking to think about rejection on a bigger scale. You can already see today's candle has been quite volatile with a low down at 59,724 and a high up at 61,229. Okay, so we know that there's actually been a lot of volatility in BTC's price in this short little period of time. Even the fair value gap has kind of almost been filled out here on this daily time frame as well, from a smart money concepts point of view. Now, because we've hit our expected range on the high side, we should be thinking about this expected range on the downside. Now, obviously, all the volatility that we've seen in the last couple of days is all to do with the Fed and their interest rate cuts that they've been talking about. They haven't cut interest rates. When they do, we expect more moves to the downside. On the daily time frame, resistance, no closed positions above the 50 SMA, 50 EMAs, coming in at 61,359 for the SMA and 61,421 on the EMA. So we wicked into the expected range, no closed positions above there, and we're starting to see some pressure. We have, of course, did close above the 200-day EMA yesterday, and we are finding that as support. So interestingly, maybe there's a possibility for a surge higher. I'm not thinking that's likely, but we know it's going to be interesting nonetheless. Huge pockets of resistance up here as well, and a targeted range is down here at 55,630 to 56,786. And as I was talking about in previous videos, this is where we look to go short. We put the stop loss higher than the previous swing high at the range of 62,745, and basically we look to kind of come down into this range. Okay, so that would have been a trade opportunity had we set that up. We'd be in profit right now, but I obviously didn't have that set up, so obviously we'll be looking to see whether or not we can push up a little bit further. Our stochastic RSI on the daily time frame is overbought, so we want to be aware that things aren't looking great there. We can see that the stochastic RSI, the relative strength RSI, is kind of hovering around that 50 level, just above, could be bullish. So, you know, potentially there we might be able to get a run to the upside. If we take a look at the volumes, you can see here that volumes are still decreasing over time here. So all of this, volumes are just, you know, pretty mediocre. And we can take a look at the volume on the 20th of August is lower than yesterday's volume of the 21st, even though we had that push to the upside. As I said earlier, right, the market is illiquid. It hasn't got that much activity going into it. If I zoom out, you can really take stock of the situation of volumes here. You can see what it was like versus where it is today. There isn't a lot of people transacting on Bitcoin right now. And again, this comes down to just the market generally that's illiquid in many different ways. So, you know, for the moment, Bitcoin is an interesting spot. We'll be looking for closed positions above the 50 EMA, 50 SMA for breakouts. But personally, I think there's a trading opportunity here. Tight stop loss higher than the swing high that we saw on the 8th of August, and expect that range to come down to the 56,786 to 55,630. I know we have kind of already hit this range, but I am expecting us to come back down to it. So it'll be interesting to see whether or not we actually completed here and I'm wrong about this, or we come back down and we come down potentially even deeper than this and tap back into those ranges on the low side of $55,000 to $54,000, which, guys, I'll go ahead and mark as a wildcard scenario just down here. We hope that the other area holds, but if it doesn't, then we're going to slip down a little bit more. Okay, so that's kind of my approach on Bitcoin at the minute. I think that the market is seeing a lot of liquidity being extracted from it. We're seeing ultimately a lot of people get wrecked on their kind of trading positions, but ultimately we are still just generally working our way towards our targeted goals before we get into bigger macro breakouts, because we are kind of progressing quite nicely to those bigger breakouts. It's just a case of being patient, waiting, and playing the game that is Bitcoin trading. And yeah, I think as 2025 comes around, we're going to see some phenomenal gains in the market. But you guys can let me know what your thoughts are in the comments below, or join us in our free Discord server linked in the description. And why don't you check out my second channel just up here, where I go through the Cardano technical analysis every single day.